All right, this episode we're going to be talking about lending after COVID. Now, normally I think lending is, pretty boring topic. Many people don't want to just listen to somebody talk about it. Personally, I talk about it all day. My wife can't stand it, and I can understand why. I mean, it's literally like we're just talking about lending. But if you're someone out there that is looking to buy a house and maybe you don't fit in that right box, we're going to talk a little bit about how lending has changed after COVID for the self-employment and just in general, a little bit of knowledge into how lending has changed and possibly where it's going. And that's pretty exciting stuff. So we have two different things, right? You have a qualified mortgage, which is your typical Fannie, Freddie, FHA, VA, right? They all fit into this box. We have to do all these certain things in order to sell the loan off, right? So the typical person, I'd like to say, living in Austin, Texas is you get a Dell employee, right? W-2, commissions, they do a great job on their payrolls. So you can see everything all clearly and nicely. They typically have, 740 credit scores and down payments, and very fits in a box is basically what I'm saying, right? Not too crazy. Then you have what's called a non-qualified mortgage. So non-QM, I've been doing them for years and years and years before they even became the thing or the rage right now. I really knew that kind of this is where things were going. And what a non-qualified mortgage is. On both sets of them, you have to qualify a person somehow to prove that they can get a mortgage, right? So you can't just do what we did before, a fast and easy loan, asking somebody, well, how much money do you make? Oh, I make $200,000. Great. Okay. Zero down. Here we go. All that crap that happened back in the past. These mortgages are nothing like that. You have to prove something. You have to show something. You have to document something. So a good example, from the change of all this and kind of where it came from is, during COVID, obviously everything got shut down. Some people lost their jobs and they had to start going, how the hell am I going to make it? Some people became Uber drivers. Some people became, food runners. Some people created their own businesses. Some people became social media stars. Some people went on OnlyFans and showed their feet. You know what I'm saying? Like, there's a lot of things that people did, right, just to make it, and I get it, right? And I can tell you that a lot of people that are out there that found a way to do something in the worst situations, they made the best of it. The issue came along where our traditional lending standards didn't really follow along fast enough with the changes that were happening with the jobs out there and the way that things were. It's like somebody calls me and they're like, I have this W-2 job and I'm an Uber driver, right? Well, unfortunately, you have to have that income for a 2-year period if you're doing them together, right? That's just a documented way of a product description that we have to follow in order to sell the loan. So what non-QM did was non-QM basically was like these banks came along or investors and said, you know what, let's take $100 million and we'll create these mortgage products and let's look at the risk of them. We'll charge a slightly higher interest rate. We'll make more money, yada, yada, yada. So we started getting all these really cool products. So to give you an example, a real example of a couple things that you could do with this is, say you were an attorney and you were a W-2 attorney and then all of a sudden you became a partner. And now you are an owner or you're under 25% and you get paid a 1099, right? In a typical conventional world, a lot of times that gray area doesn't work, right? But it makes sense. So non-QM is make sense lending, right? Which most people are like, this doesn't make sense. I'm like, I know, I didn't, those with the gold make the rules. I don't have the gold. I sell it, but I don't have it. So it's trying to figure out ways to be creative in a financial way to give the people the ability to buy a home and for investors to still make money. So for that example, you got a guy who went from W-2 to 1099. We're able to look at that income and say, well, no crap, this makes sense. We now show the income he makes. He's doing the same exact job, and well, let's just do this 1099 loan, right? Or, look at both of these things. Can we use them both? And we find ways to, instead of keeping things in a box, looking at them as more of a overall risk assessment of kind of how they are. Another example is, it's crazy. So say you sell a house or not your house. Well, you can do your house too. But say you sell your business and you make $2 million and you want to buy $1 million house. I can't give you a loan normally. Why? I have $2 million. Well, you could pay cash, but why would you, right? So you get somebody that wants to put $1 million down on, or let's just say $1 million, they want to put $500,000 down. Typically now they don't have any income. They sold their business. So they can't get a loan because they don't have any income. So what we do is we have a couple different loans. We have an asset depletion loan where I can actually take those assets, divide them by a certain number of months, and show that they're going to have reserves. And yeah, you know what? They want to put 500 grand down. They're going to qualify for that house. The risk is very low because they make a lot of money. Now, most self-employed people that are out there, you can make $50 million a year, and I've seen it, right? Gross income. I mean, Trump stated it very well back when he was debating Hillary. Like, I didn't make the laws, I follow them, right? So they have great CPAs, and the CPAs are doing what they're supposed to do and save their clients money. So they might show $50 million in gross income, but they're netting $200,000. So how the heck are they going to go buy a $1.5 million house when they only make $200,000? So we were able to take something like a bank statement loan, where they're self-employed. We look at their bank statements for 12 months. We see their deposits. We have a calculation for it, and it spits out an income for us. Now, instead of making $20,000 a month, they make $55,000 a month, whatever the case might be. So there's got to be a qualification, and typically it's more money down. It's 20%, 15%, 30%, et cetera, et cetera. So when COVID came into the situation, it really kind of made things better for the self-employment borrower. It actually finally gave us another tool to help people, right? I mean, there's always been all these tools for first-time home buyers and grants and things like that, but it never made sense that people that make a lot of money, for example, can't get a house because they don't show income the right way. And that's what this does. And one thing that people always tell me when I'm doing these mortgages is they're going to say, like, say interest rates are at 6.5. Their rate might be 7, right? And they're like, 7? And I'm like, well, we can go the normal way, but you're going to have to tell the IRS that you make $500,000 a year. So would you rather pay the IRS another $100,000 in taxes, or would you rather have 0.5% difference in interest? They're always like, oh my gosh, I didn't think about it that way. And that's the way you have to, you want everything, but you got to look at it in both, ways. Someone's willing to do something for you this way, make a little bit more money, and, that's just kind of the way that the cookie crumbles when it comes to QM versus not QM. So, these are just a couple of different examples of, kind of the things that we do, and we have so many different products. I've gotten the name the Loan Doctor out here, just because, I could take a look at something, and if I can't do it, I'm going to try everything in my power, down to hard money if needed, to see if we can get it done. But, if you shouldn't be in a house, I'm not going to put you in a house. I'm not going to try to squeeze you into something that you're going to look at and hate. I don't want you to come home and be house poor. I don't think that's the goal of this. But I do think it's criminal that people that make a ton of money and are following the law can't. And I'm just really glad that these products came out. So if that's someone that or that's you, feel free to give me a call anytime. Shoot me a text, email, whatever, and we can talk about those clients or yourself and kind of see what we can do for you. So thanks for listening. Thanks for understanding. Hopefully I brought some value to you. Share this, like it, and we'll just kind of take it from there. And I look forward to seeing you on the next show. Have a good one.